Well, my friends, there is disaster in the retail sector. Bed Bath & Beyond filed for bankruptcy protection and has asked the courts for permission to auction its assets. The struggling home goods retailer has been warning of a potential bankruptcy since early January. The company's 360 namesake stores and 120 buybuy BABY locations will remain open for the time being as it works to liquidate assets. You may have also heard that the last 2 Walmart locations in Portland are permanently shutting their doors on Friday. The closures, which were announced in late February, mean nearly 600 employees are being laid off. You have probably already heard that Kohl's has been in trouble for a while now. And that management has been trying to sell the company. And that, so far, no reasonable offers have been received. So, the company continues to operate independently. Well, we all know what normally happens to public companies whose financial performance degrades or languishes for long periods of time. You guessed it, activist shareholders come along and push for big changes. Saddled with huge debt on its balance sheet and an unimpressive product lineup, financial disaster appears to be on the horizon. What does all of this mean for the retail industry? What does this mean for the US economy? And what does this mean for the future of the United States? But, before we get into all of that, please hit the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified when new videos are released. And, before we continue, a word from the sponsor of this video. Today's sponsor is InnerLife.com, creator of the InnerLife STS system. InnerLife STS is a cloud mobile platform for mental health care and its integration with primary medical care. InnerLife STS is designed for assessment, data collection and analytics, documentation, and progress tracking. InnerLife STS creates and composes conceptualized narratives and builds them into professional-grade reports. These reports are designed for use by mental health professionals, primary care physicians, justice system professionals and universities and include mental health assessment reports, mental health treatment reports, and treatment progress reports. And InnerLife STS uses doctor-selected pseudonames for all patients. So, only the doctor knows the patient identity. Bed Bath & Beyond on Sunday filed for Chapter 11 bankruptcy protection after it failed in several last-ditch efforts to raise enough money to keep the company alive. The home goods retailer has been warning of a potential bankruptcy since early January, when it issued a going concern notice that it may not have the cash to cover expenses after a dismal holiday season. Shares of the company closed at 29 cents Friday, giving it a market value of $136.9 million. The stock is down about 88% this year. Last April, it was trading around $20 a share. The company's 360 namesake stores and 120 buybuy BABY locations will remain open for the time being as it begins to close the business and liquidate assets. But it has filed motions in New Jersey bankruptcy court asking permission to auction the 2 brands, the company said in a release. It has already committed to closing all of its Harmon face value stores. As of late November, Bed Bath had about $4.4 billion in assets and $5.2 billion in debts, court filings show. Alongside a long list of creditors, including vendors like Pinterest, Keurig and Blue Yonder, it owes the most to BNY Mellon at $1.18 billion, the documents show. It has between 25,001 and 50,000 total creditors and employs about 14,000 non-seasonal workers. Millions of customers have trusted us through the most important milestones in their lives, from going to college to getting married, settling into a new home to having a baby. Our teams have worked with incredible purpose to support and strengthen our beloved banners, Bed Bath & Beyond and buybuy BABY, CEO Sue Gove said in a statement. 6th Street has agreed to lend Bed Bath $240 million in debtor-in-possession financing so the company can have the cash flow necessary to support operations through the bankruptcy process. Bed Bath said it plans to continue to pay employees wages and benefits, maintain customer programs and honor obligations to vendors. Bed Bath & Beyond has finally succumbed to the fact its business is broken and filed for bankruptcy, said Neil Saunders, a retail analyst and consultant who works as managing director of Global Data. While it has been a long time coming, he said, they simply could not defy gravity forever. The downward spiral. Bed Bath has been hanging on by a thread since January but has refused to go down without a fight. It secured what was then considered a Hail Mary stock offering in early February that was expected to infuse more than $1 billion in equity into Bed Bath, but the plan faltered and brought in only $360 million, the company said. At the end of March, Bed Bath announced another stock offering it hoped would bring in $300 million, but that news sent the share price tumbling and it struggled to raise the funds it hoped the offering would provide. As of April 10, the company had sold approximately 100.1 million shares and raised only $48.5 million. In filings, the company warned if it didn't raise the anticipated proceeds from the offering, it would likely have to file for bankruptcy protection. A retail ice age is a term used to describe the multitudes of stores that are closing lately due to inflation, shoppers' habits shifting to e-commerce, and more. Retail expert warns malls will see ice age and Darwinian destruction if they don't reinvent themselves. Walmart will close its last 2 stores in crime-plagued Portland, Oregon. Portland is contending with a relentless wave of shoplifting that has hammered retailers. The retail ice age is a term used to describe the current state of disruption and transformation in the retail industry. It refers to the challenges faced by traditional brick-and-mortar retailers who are struggling to adapt to changing consumer behaviors, increasing competition from e-commerce companies, and shifting market dynamics. The term ice age is used to describe this phenomenon because it suggests a time of frozen stasis, where the old ways of doing things are no longer effective, and retailers are facing significant difficulties in adapting to the new reality of the market. The retail ice age is characterized by a number of trends, including the growth of e-commerce, the rise of mobile shopping, and the increasing importance of data-driven personalization and customization. Retailers who fail to adapt to these new realities risk being left behind, as consumers continue to shift their purchasing habits online and demand more personalized and convenient shopping experiences. However, those who are able to adapt and innovate are likely to emerge stronger, as they find new ways to engage with consumers and meet their evolving needs. Since the start of 2023, several beloved brands like Party City and Tuesday Morning have filed for Chapter 11 bankruptcy protection. Chapter 11 bankruptcy typically allows a business to keep trading while it restructures its debts. Many retailers are impacted by this so-called retail apocalypse. The Fed rate hikes have slowly started to reduce inflation, yet prices remain high. Unemployment figures persist at record lows, despite many large employers cutting back. Continuing supply chain issues persist as China reopens in the face of its COVID crisis. And consumer spending is tightening in preparation for bumps in the year ahead. This volatile mix of economic data may lead several retailers to use the bankruptcy process to stay viable. The following retailers are at risk of a possible Chapter 11 filing. Jo-Ann Fabrics, now formerly known as Jo-Ann, faces declining sales, comps, margins, and increasing costs, creating an uphill battle for the crafts retailer. Sales were $562.8 million, almost an 8% decline, and that to improve its liquidity and balance sheet, the company said it is suspending its quarterly dividend. Can the retailer survive without filing for Chapter 11? AMC. Rumors persist that first and second lien holders are working with restructuring advisors. Further, allegations continue that Sam Bankman-Fried's FTX may have manipulated AMC stock. Yet, the company is issuing a co-branded Visa card next year to boost revenue. But, how long can the chain last before having to significantly restructure? Dollar General. Actually, many middle and high-income shoppers are now going to the retailer, which is good news. But, like Bed, Bath and Beyond, the retailer is closing stores. Will all the newly opened stores pre-COVID cause Dollar General to use bankruptcy to reduce its footprint in the new year due to labor shortages and supply chain issues? Mattress Firm. Previously, Mattress Firm emerged from Chapter 11 in 2018 with a reduced footprint. However, bedding demand is in decline as consumers cut spending. Further, Serta Simon's Bedding, a major mattress manufacturer, is planning to file for bankruptcy in January 2023. Rite Aid. This Philadelphia-based company had three major red flags, which persist to date: deteriorating financing, inability to deleverage, and rock bottom valuation. Fitch Ratings downgraded Rite Aid's long-term issuer default rating to C from B. Higher costs related to its plan to close stores, rising pressure on consumer spending, and supply chain concerns do not bode well for Rite Aid. The Gap. Despite the rosy sales figures last quarter, there is much concern that supply chain issues and expected lower consumer spending could severely affect sales in the first part of the new year. If this occurs, how long can the retailer last before it considers a bankruptcy filing? Kohl's, one of the last department stores. During the company's third quarter earnings call, sales decelerated in October and early November compared to the year prior. Thin margins with inflation and a decline in discretionary spending are squeezing the company and could lead to a bankruptcy filing. We have all seen this movie before. Public company falls on hard times and things do not seem to be getting any better despite high-profile management initiatives. So, enter an activist shareholder and things get interesting from there. In the case of Kohl's, activist investor Ancora Holdings has entered the picture and is pushing the board to fire Kohl's CEO and chairman. Michel Gass has been the CEO of Kohl's since 2018. Peter Boneparth became Kohl's chairman this year. This is not the first time that Ancora Holdings has pushed to restructure Kohl's board. The activist shareholder expressed its demands in a letter to the board on Thursday. Ancora has only a 2.5% stake in Kohl's. But activist shareholders typically curry favor and support from other institutional shareholders, most of whom hold much larger stakes. But, what do you think? Please hit the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified when new videos are released. Please share this video on social media. Thank you for watching.